Good morning, everyone. This is your market update for Thursday, September 25th. So, starting with the US dollar index, the dollar stabilized in Wednesday European section, rebounding to around 97.8. Expectations of Fed rate cuts continue to weigh on the greenback, with bullish momentum clearly lacking. And Chairman Powell's comment earlier in the week kept the Fed's sentiment index in dovish territory, while the Bank of Canada governor issued a rare warning that signaled a fading of the dollar's safe haven aura. Cleveland Fed President Beth Hammack also reminded the markets that inflationary pressures remain stubborn in the short term, underlying the Fed's balancing act between price stability and employment. The market's focus now turns to the Fed's preferred inflation gauge, the August PCE price index, which is expected to show further easing. And technically, the dollar index paused its 3 days climb and fell to a low of 97.21 on Tuesday. The daily chart suggests a potential reversal from bullish to bearish, with the 14-day RSI still below 50. The index is trading under its 35-day moving average, and a retest of 97 rebound number is possible. And on the upside, only a break above 98 would re-establish a bullish bias. So moving to WTI crude oil. The oil extended gains, rising nearly 1.8% on Wednesday to approach $65 after Tuesday a 2% advance. The move was driven by a surprise draw in US crude inventories. The EIA reported a 607,000 barrel drop against the expectations of a build. And geopolitical risks remain a strong support factor. And negotiations to restart Iraqi Kurdish oil exports are still stalled, and NATO has warned of a robust response to Russian airspace violations, and Ukrainian drone strikes continue to pressure Russia energy infrastructure. And meanwhile, Chevron confirmed it will only export half of its Venezuelan crude due to US restrictions. And from a technical perspective, WTI is holding about $63 and the 5 day moving average, pointing to a short term momentum. Strong support is at 61.4, while resistance is seen as 65.61 at the 50% Fibonacci retracement of the 70 to 61 move. So next, spot gold. Gold consolidate after its sharp rally, trading below 37.40 per ounce in early European hours. And dovish Fed expectations and heightened geopolitical risk are combining to keep the safe haven demand elevated. And the daily chart shows the uptrend remains intact, though the RSI at 79 signals extreme overbought conditions. And on the downside, key levels include 3750, 3700, and 3650. And on the upside, a close above 3791 could trigger a retest of the all-time high at 3800, with further room towards 3850. And last but not least, the Australian dollar. The Aussie dollar strengthened after consumer prices rose 3% year on year in August, up from 2.8% in July. The data suggests inflation pressures remain, though the RBA is still expected to keep rates steady at 3.6% in September. Governor Michelle Bullock has emphasized that inflation is on track to target, supported by a resilient labor market. An Australian dollar traded above 0.6620 following the release, but remains capped by resistance near 66.32 and 0.6660. A break higher could revisit the recent 11-month high at 0.6707, and on the downside, initial support is at 0.66, with further pressure towards the 55-day moving average as 0.6540 if it broken. So that's all for today's morning review. With Powell's comments, upcoming PCE data, and ongoing geopolitical developments, the markets will remain sensitive to shifting signals. Thank you for watching.